Inflation has been the dominant economic force for the past few years, eating away at savings, distorting markets, and pushing people to search for alternatives. So while yesterday's inflation data came in much lower than expected, which is amazing for crypto and the markets at large, it's important to know that the fight is far from over, because it's important to remember that since 2020, 80% of the dollars in circulation have been printed. That kind of money creation doesn't just disappear into thin air. It flows into assets, it flows into markets, and most importantly, it ultimately flows into a store of value. And for centuries, gold has been the ultimate store of value, as the ultimate hedge against inflation. And this is still true, as gold is technically having one of its best years ever. But in this digital era, we know that Bitcoin is rising and emerging as its fiercest competitor as the new digital gold. Even Jerome Powell has acknowledged Bitcoin as a competitor to gold. And with gold's price surging lately, we know that Bitcoin is most likely not too far behind. So what does this all mean for the markets? Is Bitcoin about to break out and follow gold as it's historically done? And how does the weakening dollar play into all of this? And lastly, what does this mean for the crypto market? So hello, welcome to my channel. My name is Jessica. I'm so happy you're here with me today. And without further ado, let us get into today's research so we can unpack all of this for us. Okay, so we're gonna start off with Bitcoin's price as we always do. Bitcoin has been on the bullish move today, even though the price doesn't look too exciting at the moment. Just moments before I hit the record button, Bitcoin was at 83,000 and it's been trying to pump its way back up. So let's keep moving on. And then as you can see here on the daily, you can see that the altcoin market has also been rallying predominantly on the bullish side of things for the good coins. Even though Hyperliquid's good, it's down right now. But overall, I would say it's been more or less a bullish day, which is fantastic. And then next, let us tune in to what Representative Scott Perry here has to share with us on X. And he says, today's inflation report showed the economy is recovering from Biden's delirious policies. Now we know this and we've heard it again and again, so I don't mean to be redundant, but it is definitely a theme and we are definitely in the economic situation we are now. As much as we may want to blame Trump for this tariff war, he is only in the position of having to fix tariffs and fix this failing economy, which we've been feeling the pains of because the previous administration and the previous administrations did not do a good job at managing the economy, primarily because they don't come from traditional finance. Actually, I think all future presidents should probably have that on their resume moving forward, not just be a career politician, because I think that history has shown that they're a bit disconnected from the economy. So anyway, let us listen to what he shares here from CNN.
Finally, we have some good news on the economy and really the number one issue for many Americans, the cost of living. So we just learned that consumer prices in February increased by 2.8% year over year, 0.2% month over month. Both of these figures were a step in the right direction and both were better than expected. So this is definitely very encouraging to see because it's going to, I think, relieve some fears that inflation was perhaps re-accelerating because this actually breaks a streak of 4 straight months where I think you could see it on the chart all the way to the right, where the inflation rate was going in the wrong direction, right? It was going higher and higher. Finally, we're seeing it dip. Finally, we have some.
Isn't that great? So remember, this is the data we were waiting for yesterday. In yesterday's video, I mentioned this. So overall, this is the lowest core inflation in 4 years, the lowest mortgage rates since December, and gas prices and airfare are also down. So we can see that overall, despite the tariffs war, the economy is starting to respond. So this is a little funny, but you know what this means. Most likely, even though it's not a guarantee, these conditions do speak to the high potential of the Fed starting quantitative easing or printing more money. As you can see here on the screen, this is the infamous meme gif of Jerome Powell printing. So We know that with more money in circulation, eventually it trickles its way into the crypto market, and it definitely makes its way into store of values and hedges against inflation, because this, as you can see here, the printing of money is inflation. It's inflationary. The more money in circulation, the less it's worth. So all the investors, basically everyone, is going to be looking to put their money as fast as possible into protections, into a hedge against inflation. So ultimately it should trickle its way into Bitcoin. And then next, according to Kobesi letter here, below is the chart of the US money supply. So since 2020, you can see the US has printed nearly 80% of all US dollars in circulation. How shocking is this? This is in large part due to the COVID stimulus. So yeah, so to put that into perspective, as I was saying in the intro, at the start of 2020, we had approximately $4 trillion in circulation, and now there are nearly $19 trillion in circulation. Like, let that sink in. From 4 trillion approximately to 19 trillion. That's a 375% jump in 3 years. How shocking. So we're paying the price right now. This is what you see reflected in groceries and gas, even though gas prices are down. Officially, I think it's been like a little over a month since gas prices are starting to come down, which is great because we know there's a huge correlation between gas prices being more economical and people's ability to live and live well and do business well and stir a healthy market. So this is really, really great. So this is a post shared by Swan, and I agree. So the quote is, "Inflation is the true opium of the people, and it's administered to them by anti-capitalist governments and parties." So it's like retail or the general public's like drug. It's so addicting, right? But it's so harmful, just like drugs are. It's so ultimately harmful to the people and to all of us. And the worst part is that it's administered and given by the anti-capitalists, governments and parties. This is why I said a moment ago, I think it'd be great if presidents and definitely everyone in government, I feel like it's literally crazy, a little outrageous. And I don't mean to go on a rant and be hateful here, but how is it that our policymakers have no background in economics? Not all of them, they definitely don't. And that should be a criteria, I think. How are they supposed to pass laws that are going to be favorable to the people if they have no idea what it's like to be out there, to be part of the service sector, to be part of the manufacturing sector, to be a normal working human being, citizen? That is so crazy. So that's why Swan here calls them anti-capitalists, because they just inherently are not actually part of the market. They're the governing body, the elite. Anyway, that said, the dollar is imploding, as we can see here, shared by Crypto Rover and Trump. In many ways, there's a lot of speculation, as I've shared in past videos, he's specifically and strategically doing, because as the dollar weakens, eventually this is going to push the Fed to cutting rates, right? But it's a delicate balance because inflation can't be too high. So it's like inflation has to be contained, but yet the market has to need the rate cuts as well. So it's actually kind of an interesting dance that it has to happen here. But that said, in terms of signals, we can see here shared by Merligen, the trader on X. He shares this chart and it basically says, I guess the DXY, right, is flashing the bottom signal. So every time this has flashed in the past, the signal, basically the MACD flips bearish and Bitcoin goes up. And right now it's flashing. So apparently Bitcoin is sad, as you can see in the green box up here at the top, and its correlation to the red box here at the bottom, which is the DXY. You can see that it looks like Bitcoin is definitely set up to rally here very, very soon. So moving on, you can now see that, according to the Bitcoin historian here, that the US dollar is now down 99% against Bitcoin since launch. So what signal do you think this tells investors and tells the market? It tells them, hey, maybe Bitcoin's worth considering, as a hedge against inflation, because the US dollar is down almost 100%. It's down 99% against Bitcoin. And you can see that it's true across basically all major currencies in the world. You can see this moving chart here presented by Walker Walker America, who's the host of the Bitcoin podcast. So it's actually a great visual. I appreciate this. So it's happening across the board. It's happening globally. Hence the reason that the global money supply is supposed to increase and is increasing already in all the major banks of the world, the European Central Bank, the Bank of Japan. Everyone is looking to either quantitative ease, start printing more money, or lower rates. And as they do, once again, it's going to make everyone, all the people of the world, lose their faith in their currencies and look to put their money into other assets that will protect the value of their money, like Bitcoin. And we know that the whole world is watching our news. The whole world is watching these White House press conferences and listening to Trump. The whole world follows America. They do. There's a domino effect. And we're seeing the US, the US approved its Bitcoin strategic reserve. Now it has a crypto strategic reserve. So the whole world is looking at Bitcoin right now. So anyway, now let's listen from Jerome Powell himself as he's interviewed here at CNBC, and listen to him explain how he sees Bitcoin.
Or in the Federal Reserve itself, in terms of the system. What do you think of that idea?
I don't think that's how people think about it. I mean, it's so.
Well, some people.
People use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment. Or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold. That's really how I think of it.
Okay, so he said several things here that I don't necessarily agree with, but they're a reflection of his own knowledge and understanding and experience with Bitcoin. However, what he does say that is true, and I think everyone that's been in Bitcoin for some time believes and agrees with this, is that it is a store of value and it is comparable to gold. It's digital gold, as he said. So I will repost this on my X account, which is Crypto by Jess. I welcome you to follow me because I share all of my news there, so you can go listen to this yourself. But that said, taking a look at gold, now that we're talking about gold as a hedge against inflation, especially, you can see that gold prices are surging right now. So let's read what the Kobesi letter has to say. They say, as the S&P 500 has erased over $5 trillion. That's so shocking. Gold is now set to cross above the record 20 trillion in market cap. Gold has more than quadrupled the S&P 500's return over the last 12 months. Gold is telling us something. Let us explain. So I will also repost this on my page. Go read about it there in detail. It's so important to stay educated and attuned to why and what is happening in the market, like why it's happening, and see the correlation between gold and Bitcoin if you don't already understand. So that said, what else is going on? I covered this in yesterday's video and I've been covering this in my last few videos, but because I don't know when you tune in and when you tune out, I'm going to share it again anyway. And we know that in January, the global money supply rose 3.9% year over year, which is the fastest pace in 30 months. So as the money supply has expanded, gold has become more valuable. Gold markets continue to be a crucial leading indicator. So this is where we are right now, where you can see circled in red. So we can expect this to be going up exponentially because of the global situation, because the dollar has inflated, I want to say almost 80%. Is that right? Since COVID, since they started printing money and sending everyone checks for free. That's wild. So even though this whole, tariff negotiation with all the countries of the world are going on right now, and even though it should ultimately bring in more favorable economic conditions to the US, and even though we're having this Bitcoin strategic reserve and all these things, it doesn't change the fact that over here, like on left field or right field, depending on where you are, like where I appear on your side of the screen, it doesn't matter. Like that doesn't erase the fact that 80% of all US dollars were printed in the last 5 years. That's not just going to disappear. And that's all the more the case why putting your money into Bitcoin is so important, and why potentially investing into the right crypto altcoins, like I've shared before. My top favorite right now off the top of my head would be like Chainlink, Ondo, and EOS. I feel very, very safe and responsible in sharing these with you, even though it's not financial advice because I'm not a certified trader or investor. But this stresses the importance of investing into Bitcoin, if anything. And sure, some gold if you want to, but Bitcoin is rising and about to outperform gold. I know we'll have to just tune in and get an update on that data, but it's coming, guys, and it's so important to be paying attention and investing into Bitcoin. So let's listen to this argument of Bitcoin versus gold. This was shared by Guy on the Earth on X, and it's a good chart. So this is why I'm sharing it with you. And he says, Bitcoin has given back all of its gains to gold since the November rally to all-time highs. We have found support from where we initially took off on this run. A bullish divergence on the daily looks to be forming a bottom. We might see Bitcoin gain on gold over the next few days until it challenges the 200-day moving average. How it reacts there would be a great indicator. So pay attention because we're living history in real time, and this is why it's so exciting. So anyway, what else? Here we have Martina Campbell also sharing with us that even though during gold's strongest year of the century, Bitcoin is outperforming. This is what I was referencing a few moments ago by 4.2 times up to 123%. So sure, you could invest into gold, but Bitcoin's outperforming it year to date. How amazing. So this demonetization of the incumbent monetary debasement hedge in action, expect the pace to pick up. So let's zoom in, take a look. Where do you want to invest? Into gold? That's this flat line, or the orange line, Bitcoin. And then here we have Alien Ovich on X sharing that in the past 12 months, every time the correlation between gold and Bitcoin got into the negative 0.5, then turned positive again, the following 20 days saw at least a 20% rally in Bitcoin. So if a similar price action takes place in the coming weeks, then it would push Bitcoin into new all-time highs above 115,000 next month. So this is the projection coming, a Bitcoin back up above 115, which it has to regain, right? So to wrap it up, here we have Axel sharing with us, who's a research and on-chain and macro researcher from Bitcoin verified author, Crypto Quant. And he shares this chart with us. So take a look or take a screenshot, but he says, this metric represents how many ounces of gold can be purchased with one Bitcoin. After reaching a new all-time high, the Bitcoin gold ratio dropped by 30%. In the previous macro cycle, at Bitcoin's peak, the ratio declined by 36%. So given that gold has remained stable despite the current macroeconomic uncertainty, we can anticipate that if the ratio drops another 6%, we may see a local bottom for this macro cycle. So guys, there you have it. That's where we are right now. We know inflation is not going away. We know that gold has been the steady, slow and steady hedge against inflation all this time, despite all the turbulence in the macro market. And we know that Bitcoin has been outperforming gold year to date. So maybe it's worth considering investing into. So anyway, exciting times. Let's wait to see what tomorrow's market brings. And until then, be safe, have a great day, and I will catch you guys in my next video. Ciao.